And Mind Crypto here. I hope we're all having a wonderful day. And the title of the video is 2024 Quant Explosion Will Be Huge. Remember, none of this is financial advice. I am not a financial advisor, and any of the information provided in this video should never be seen as a signal to buy or to sell. But first and foremost, we look at the crypto bubbles, and as we can see, we're still at that $118 mark. We're up one rank to 56 and market cap of $1.43 billion with a 24-hour volume, which is quite low, below $15 million. We're up 0.2% in the hour, up 0.1% in the day, and up 0.2% in the week, and up 5% in the last 30 days. And as we can see, it's looking a bit greener today, a little bit more happy in the crypto market. But as we can see, if we look at the crypto quant, we can see the exchange reserves have slightly risen to 1.392 billion, and it keeps ranging around this. Exchange net flow there, we're seeing net deposits on exchanges are low compared to the last 7-day average, and the RSI sitting around neutral, and the same with stochastic. And we move to bull shock trading to look at our trade analysis. He says here, following on from my video yesterday about SATP and the possibility of quant gateway staking in the future, we thought we'd take a look at the bigger picture. Now, if you haven't already seen my video from yesterday, SATP, I believe, is the gateway for the gateway staking once that hopefully goes live. He says here, from the 3-day chart, we can see a price moves the point of control, which is POC, and regularly pulls back to this level. And price did just that, but this time also mitigated a buy zone where we believe some big boys were buying. He says speculation, price moves away from this buy zone before all their orders could be filled, thus price coming back down to fill that fair value gap. Notice how this level held up price. Once their bags are filled, we will see price move to test highs on the latest price action for $143 to $156. On the 1-week time frame, we can also see the bearish FVG and also being filled, and price currently starting to print a bullish candle. Ultimately, we believe price is being suppressed with some wallets offloading at certain levels as to keep the price in this range. We welcome this as we will also be able to keep adding to our positions while in this range and load up if price dips lower. And absolutely there. Now, I'm still seeing wallets move mainly from exchanges to Wintermute, which Wintermute is an institutional market maker. So we're not actually seeing any from Coinbase to private wallets at the moment. Maybe these levels just aren't where they want. They're waiting for something a bit lower. He says here, if gateway staking do get released to the public, expect Quant to start mammoth run to the upside. He says this is not a poo coin. This is meant for institutions and enterprises, because we see here from the man himself, Gilbert Verdian, discuss last year it was more important than ever to distinguish crypto from the technology that powers it. Although 2023 was tumultuous for cryptocurrencies, with the heads of several high-profile exchanges facing criminal proceedings and the UK government announcing its plans to regulate the industry, blockchain technology continues its path towards broader use and more successful central bank digital currency experiments and the launch of prominent commercial bank digital coins. Our prediction for 2024 is that it will be the year of widespread institutional adoption of the transformative technology. So really bullish there. CBDC adoption isn't slowing down. The momentum behind CBDC adoption remains strong in 2023, with several of the world's largest central banks and monetary authorities seeking advice on how to successfully implement CBDCs. In fact, according to the Bank of International Settlements, it is expected that there could be as many as 15 retail and 9 wholesale CBDCs in circulation by 2030. Research also found that 130 countries are now in the exploration phase of CBDCs, and all G20 countries, with exception of Argentina, are now in the advanced phases. The uptake of CBDCs represents a paradigm shift in the way financial institutions and governments perceive digital currencies, and we can now expect to see further implementation throughout 2024. It's clear the introduction of CBDCs is inevitable, but to succeed, commercial and wholesale banks must have the infrastructure in place to support this transition. CBDCs are not just a means of exchange, they have potential to transform current payment systems, offering a multitude of benefits from efficiency and accessibility to increased security, transparency, and cost effectiveness. CBDCs can help financial institutions to address inefficiency, manual processes, and continual fraud threats. But it is important to ensure they are implemented correctly. Having said that, we expect the adoption of CBDCs to be gradual, partly to ensure that they are built upon stable foundations that reflect prudence and care we expect from financial services, but also to allow sustainable growth and for regulatory parameters to be established and implemented. Programmable payments, the introduction of CBDCs has added a new dimension to blockchain technology that will transform the future payments for businesses and individuals. However, banks needn't wait for CBDCs to issue their own digital currencies. We've already started to see the likes of JP Morgan instituting programmable payments functionality in their own currency, JPM Coin, via Onyx, their blockchain platform. The first of its kind, this new functionality is now available to all its institutional clients and promises to enable real-time programmable treasury functionality and new digital business models. Siemens, the first of their clients to implement the new functionality, is now benefiting from ability to apply a wide range of rules to conventional payments. The feature can specify rules for how to top up bank account if there's a shortfall, and enables payments to respond to events such as margin calls or if an asset or good is delivered. The use case is a perfect example of blockchain technology being used in a way that allow commercial banks to develop new innovative products for their customers. Following the success of JP Morgan has seen by adding programmability to payments, we can expect to see more banks harnessing the power of technology in 2024. It goes on to say, an evolving regulatory landscape. We know from the collapse of FTX and Binance trial that cryptocurrency related crime had risen in 2023, with a number of key players found guilty of fraud and money laundering. It's now clear to all involved the industry needs regulating. He says here, crypto is just the beginning though. In 2024, we can expect further movement towards the implementation of additional regulatory frameworks, laws, and policies related to digital assets of all kinds that will spearhead the widespread adoption of blockchain technology. Far from being a burden, this kind of regulatory certainty is what most financial institutions with ambitions in digital assets are crying out for. Similarly, establishing technical standards for blockchains is fundamental, ensuring the security, reliability, and future innovation of the industry. Not only do they help to authorize commonality through guidelines, rules, and technical criteria, but it also allows for increased interoperability, trust, and sustainable growth. According to the GSMI Global Blockchain Business Council, there were 63 technical standards bodies advancing blockchain developments in 2023, which reflects how much the industry has grown, as well as the importance of setting clear, formalized standards. He goes on to say here, however, whilst 2023 saw progress in standardization of blockchain technology, such as ISO TC307, which we talk a lot about on this channel, and other standards setting organizations such as the IETF, there is more to be done by bringing together and combining existing standards and a framework to create a blueprint for the industry. He goes on, the need for interoperability. As the introduction of blockchain standards come into play, so will the need for truly interoperable solutions that allow for seamless transfer of assets. In 2024, we can expect to see improved communication between the new and existing blockchains as part of a shift towards building an intertwined ecosystem. There will be a real emphasis on cross-chain compatibility to allow frictionless asset transfer between different networks. We also saw a huge number of crypto related threats and attacks last year, with crypto payments to ransomware attackers reaching $449 million in the first half of 2023 as part of a move towards a regulated landscape. We're likely to see institutions investing in robust security measures and infrastructure to help safeguard assets and mitigate risks, especially as the businesses operate across multiple networks. Failure to deliver against these security requirements could be detrimental to a business's reputation, resulting in a loss of trust amongst users and potential financial losses. It's imperative that institutions prioritize security when they are looking to achieve interoperability. Without it, they risk being susceptible to interception by attackers. Striking a balance between innovation and responsibility. In 2024, blockchain sector will experience a new era of maturity as a result of tighter regulations and widespread institutional adoption. However, success is reliant upon commitment to ensuring any projects or solutions prioritize security, compliance, and trust. Those that can achieve this will be the ones who reap the benefits of this technology in 2024 and beyond. Now, that is absolutely excellent. And obviously, it gives you an insight to what is likely to happen in the coming years. So I am very, very excited. I put out a tweet yesterday and I said, just a hint to those that play around with non-compliant crypto, success in blockchain sector will be reliant upon security, compliance, and trust. Does your portfolio mirror these attributes? And that's what we need to think about when we're making our investments, looking at meme coins like Doge, Shiba, and any other coin that really has no real world use case will at some point be locked out. That's just my opinion, not financial advice. We also see this from Gilbert, a post yesterday, time for institutions using enterprise grade technology for tokenized assets and settling with tokenized money. He's replying to a tweet from Blockworks here. Think says BlackRock hopes to make crypto much cheaper for investors. And we can see the article here. It says here, during a Fox Business interview, Fink also said that BlackRock hopes to make crypto much cheaper for investors. Right now, the bid-ask spread for crypto is very expensive, he said. BlackRock announced its spot Bitcoin in early June, proposing the launch of an iShares Bitcoin trust, which would tap Coinbase as both its Bitcoin custodian and the operator as part of its surveillance sharing agreement. Now, as I know, I've looked through many, many big wallets that are accumulating with no outflows. Now, if this is where the big boys are playing at Coinbase, that gives us a hint to why these might be storing lots and lots of quant. Now, I see this from Eric E. Larry Fink wants to tokenize stocks, bonds, every financial asset he can. What platform do you think BlackRock wants to do this on? So let's have a listen to this.
And we believe it's so important to be anticipating the next move. I would also say on the beginnings of a ETF Bitcoin, we believe ETFs are a technology no different than Bitcoin was a technology for asset storage. We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, QSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that it fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about like voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own share.
So we could see there Larry Fink bullish on digital assets. And we see this, San says, not public ETH, probably Corda, Hyperledger, private ETH, etc. And we can see this little clip that he took from BlackRock website For the asset management industry, we believe the operational potential of some of the underlying technologies in digital asset space could have exciting applications. In particular, the tokenization of asset classes offers the prospect of driving efficiencies in capital markets, shortening value chains, and improving cost and access for investors. At BlackRock, we continue to explore the digital assets ecosystem, especially areas most relevant to our clients, such as permissioned blockchains and tokenization of stocks and bonds. Now, that's quite key there. Permissioned is basically locked by the institutions and private effectively. We also see this from construction trader ETH. I look forward to the day when all stocks and bonds are tokenized. CEO Larry Fink from BlackRock talking on CNBC just last week. Quant and LCX are two big names that are going to help achieve this. Without Quant, there is no mass adoption, and I absolutely agree with this. Lip puckering stuff coming out in the news, which only makes me feel more and more positive towards Quant as they are providing that bridge for legacy into blockchain technology. So there you go, guys. All the best, and I'll catch you later.